In this video, we're diving deep into the latest Bank of America downgrade on SoFi, the truth behind their numbers, and why this move reveals their fear of SoFi's unstoppable momentum. Plus, we'll discuss SoFi's explosive potential, its future growth trajectory, and why 2025 could be the year this stock hits new highs. Let's uncover the real story together. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Guys, let's face it, we're witnessing something incredible. SoFi is becoming the disruptor that legacy banks can no longer ignore, and today's downgrade by Bank of America is proof of that. During what's supposed to be our rally season, they've come out with an underperform rating and slapped a $12 price target on the stock. But here's the kicker. They've completely ignored SoFi's guidance and made up their own numbers to justify their bearish take. Let's break this down and see why this downgrade has more to do with fear than facts. Bank of America's analysts claim SoFi's EPS will hit just 52 cents, which is way below even the lower end of SoFi's guidance of 55 to 80. Management has clearly outlined this range, but instead of working with those figures, these analysts decided to rewrite reality. Why? Because SoFi's growth terrifies them. They're doing everything they can to slow the stock's momentum, but the truth is, SoFi is unstoppable. Let's talk about scale. SoFi is on track to add 1 million members per quarter, according to CEO Anthony Noto. That's massive. It took SoFi over a decade to reach 10 million members, but they're now positioned to add an additional 4 million members in just a single year. That's the kind of growth legacy banks can only dream about. And let's not forget the potential of cross-buying within the platform. With each new member, the opportunities for additional product adoption multiply. SoFi isn't just growing, it's scaling like a tech giant. Then there's the Galileo tech platform, what I like to call SoFi's X Factor. Legacy banks like Bank of America know that once SoFi lands a major whale on Galileo, the game changes entirely. Galileo represents the AWS of fintech, a hybrid model that combines software as a service with financial technology. If SoFi secures a significant legacy bank client, the domino effect will be unstoppable. This is SoFi's Tesla moment, their Nvidia moment, the kind of breakthrough that skyrockets a company's valuation. And if you're not already invested by the time that news breaks, you're going to miss out on not just a single pop, but potentially a sustained rally that redefines the stock. Let's take a closer look at Bank of America. Why are they so desperate to contain SoFi's market cap? The answer is simple. The bigger SoFi's market cap grows, the more powerful it becomes. With increased valuation comes more flexibility to invest in growth, whether through hiring, new product launches, or strategic acquisitions. By downgrading SoFi, legacy banks are trying to keep the stock in check, but it's a losing battle. Now, here's something fascinating. Bank of America's own growth numbers expose the hypocrisy of their downgrade. Over the past 4 quarters, their revenue growth has been consistently negative, negative 4.2%, negative 3.2%, and so on. Meanwhile, SoFi's revenue growth is soaring at 34%. Net income? SoFi's jumped 122%, while Bank of America's dropped by 11%. So let me ask you this. Why should we listen to a company that can't even grow its own business when they tell us how to value SoFi? And here's the real kicker. SoFi's long-term guidance already accounts for its existing business lines. The 80 EPS projection doesn't even include the massive potential of the Galileo platform or the newly launched loan platform, which generated $42 million in revenue in Q3 alone. If SoFi lands a major client on Galileo, that 80-cent EPS projection could easily push past 1 or even 125 cents. Bank of America's 52-cent estimate. That's not just conservative. It's deliberately misleading. Let's talk about momentum. Over the past few weeks, we've seen a series of downgrades aimed at slowing SoFi's rise. JP Morgan gave us an underperform rating with a $16 target, and now Bank of America comes in even lower. But despite these attempts, the stock keeps bouncing back. Retail investors are buying up the dips, showing their belief in SoFi's long-term vision. Institutional ownership is at an all-time high, and for good reason. SoFi is stealing market share from legacy banks every single day. With 34% revenue growth, a rapidly expanding member base, and transformative tech like Galileo, the company is positioning itself as a dominant player in the fintech space. Legacy banks see this, and they're scared. What does the future look like for SoFi? By 2025, we could be talking about a $45 stock minimum. By 2027, once SoFi hits its EPS targets and continues scaling, $100 is well within reach. The journey to that milestone won't be linear. There will be volatility, and the clowns on Wall Street will keep trying to slow us down. But if you stay focused on the fundamentals, the long-term rewards will be worth it. Here's what you need to know. SoFi is a growth story, and growth stories are messy, but the numbers don't lie. Revenue is up, net income is up, member growth is accelerating. The Galileo platform is a ticking time bomb of potential, and every downgrade, every attempt to contain this stock is just another signal that we're on the right path. So where do we go from here? If you're already invested, hold strong. If you're on the sidelines, consider this your wake-up call. SoFi is building something extraordinary, and the opportunity to be part of this journey won't last forever. The analysts who downgrade this stock now will be the same ones upgrading it when it's trading at $50 or $100. Don't let them scare you out of your position. To wrap it up, 2025 is shaping up to be SoFi's breakout year. If Galileo lands a major client, it's game over for the competition. This stock is going to the moon, and the only question is whether you'll be on board when it takes off. SoFi isn't just another fintech, it's a revolution in the making. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.